Hello everyone, welcome back to another lesson. If you're new to this channel, my name is Farhan and I help accounting students like you ace their exams. Today we have got a practice question where you will learn the types of errors that are involved and also prepare the necessary journal entries to correct these errors. You can see the question on the left hand side of your screen, and on the right hand side we've got all the workings which I'll go through and explain to you step by step. With that being said, let's begin. While closing the accounts of High Waves Tour Agency for the financial year ended 31 July 2023, the accountant discovered the following errors. So here we have three different errors, and the first requirement in Part A is to do the journal entries and correct them. So let's look into the first error. Drawings of cash by owner for a personal use $1,230 has been recorded at $1,320. Alright, so this type of error is what we classify as an error of original entry, where the error is within the numbers. Now, based on the original transaction that happened, the initial way to record this would be to debit the drawings account by $1,230 and to credit the cash in hand account by $1,230. Okay, but what ended up happening was that we recorded it at an excess of $90. So we ended up recording it at $1,320. Therefore, we have to reduce the drawings account. Drawings account in itself is debited, which means when we have to reduce it, we will credit it. So we credit the drawings account by $90. Okay. Simultaneously, we understand the cash in hand account has been recorded at $1,320 credit when we should have credited it at only $1,230. That means our cash in hand balance had been understated by $90. So we have to fix this. And the way to correct this is to debit the cash in hand account by $90, where we are essentially increasing the current asset. All right. So the correction needed to be done for the first transaction is to debit the cash in hand account by $90 and to credit the drawings account by $90. Let's look into the second transaction. Commission income of $540 earned for the year has not been received but was debited to the cash at bank account and credited to the commission income account. All right. So this type of error is what we classify as an error of commission. And the reason we call this an error of commission is because the category is the same, which is the category of current assets, but the wrong account has been selected. So what do we understand by the wrong account? Now, based on the transaction that the business had originally recorded, this is what they have done. So the business originally debited the cash at bank account by $540 and credited the commission income account by $540. Okay. Now the credit to the commission income account by $540 is correct because this is income which has been earned, and any income by default is credited when it increases. All right. But while this income is earned, the question clearly mentions that this commission income has not been received. What does that mean if it has not been received? That means we didn't get any deposits in our bank account, which would make sense for us to debit the cash at bank account by $540. Therefore, that is the incorrect entry here. So how do we correct this? So to correct this, we have to first reduce the cash at bank account by $540 to reflect the reduction. And simultaneously, we will increase by debiting a current asset account, which is the commission income receivable account, by $540. So the correction in this case is to debit the commission income receivable account by $540, which means our assets are increasing, and simultaneously we credit the cash at bank account by $540, where we are also decreasing another asset, which is the cash at bank account. All right, so let's look into the third event, which is proceeds from the sale of a non-current asset, which is equipment, for $5,000 has been credited to the sales revenue account. Now, this is what we classify as an error of principle. And the reason we call this an error of principle is because the error is within the fundamentals where the wrong category has been chosen. Sales revenue and sale of asset are two different things. Sales revenue relates to the regular operations of the business. The business we are working with, which is High Waves Tour Agency, so we can confidently say that because it's a travel agency, it deals with things that are involved in a travel tour business where you sell tickets or packages for holidays. But when you're selling a non-current asset, which is the equipment, that money which comes from this non-current asset sale cannot be classified as a revenue. This is what we call an error of principle because the wrong categories are involved. So what we have to do now is to reduce the sales revenue which we originally credited, and the way we reduce it is to debit the sales revenue account by $5,000, and simultaneously we credit the sale of non-current asset account, which specifically in our case is the equipment account. So we credit the sale of equipment account by $5,000. All right. Now, what's being asked of us in part B? State 2 reasons for preparing a trial balance. Now, you have already seen many trial balances by now, I believe. And what we do in a trial balance is to show the different accounts which we have got in our business and the total debits and credits and which accounts are debited and which accounts are credited. Now, the main purpose of preparing a trial balance is to check the arithmetic accuracy of the ledger accounts. And the way we can check this arithmetic accuracy is by simply validating whether the total debits equal the total credits. A second reason for preparing the trial balance is to help us in the preparation of financial statements, such as the statement of financial performance, also known as the income statement, and the statement of financial position, also known as the balance sheet. Okay? Now, what is part C? Explain how errors could still exist when a trial balance is balanced. Now, we understand a trial balance can balance where the total debits and total credits are equal. But if you have failed to record a transaction, which is what we classify as an error of omission, what's happening is that you have failed to capture the debits and credits for the specific transaction in your books. So therefore, the debits and credit totals are not really affected, right? So whenever you forget to record a transaction, what will happen is that your trial balance may still balance, and you can't really find that error by just looking into the trial balance, which lists the accounts with their respective numbers. All right. So when you miss a transaction, which is the error of omission, that's when a trial balance may still balance, but we have to go deep into the source documents or track to see whether or not we failed to record any transaction with any of our business customers or suppliers or for expenses. All right. So that's all for today's lesson. If you found value in this content, make sure to drop a like and subscribe to this channel and watch the other videos. You'll get a ton of value, and I'll see you in the next one.